National Retail Properties Stock, ticker symbol NNN, or triple N if you prefer. This stock is down 18% year to date, which is quite interesting since the S&P 500 is down 23% year to date. Triple N stock is loved among the investor because of the dividends. 5.5% dividend yield is of course very attractive, and they are known to be a steady dividend payer with increasing the dividends for more than 31 years in a row. Triple N stock has a 52-week high of $48 and a 52-week low of $38. Right now, Triple N stock is at $39, so it's almost at the 52-week low. But does this mean that this stock is a buy? In this video I'm going to show you real quickly what National Retail Properties does, the historical returns, the fundamental analysis, dividends, competitors, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does National Retail Properties do? National Retail Properties is a real estate investment trust that invests in properties throughout the United States. The company generates revenue from leasing properties to tenants, including convenience stores, automotive servers, fitness centers, theaters, restaurants, and banks. If we check the most recent earnings released on the 3rd of August, we see that Triple M reported a FFO of $0.46 and missed the target by 11 cents. Revenue was at 119 million and beat the target by 0.1 million. So the FFO is quite interesting to check in the earnings report. In the most recent earnings report we see the company highlights 33 consecutive years of annual dividend increases. The company is also very diversified with more than 3,300 properties totaling 33.8 million square feet. Long-term net leases with average remaining lease term of 10.6 years and 99% occupancy rate, which is great. On the right we see that the common equity represents 59% and unsecured debt represents almost 41%. As they stated themselves, they have a conservative balance sheet. On the right we see that top lines of trade as a percentage of an annual base rent. Convenience stores represents the biggest segment with 17%. Automotive service is at 13% and restaurant represents 9.6 and 9.2%. On the left we see the FFO per share at $0.77 and the core FFO at $0.79. AFFO is at $0.81 and dividends is at $0.55. So dividends are covered very well and this comforts me a lot of course. The payout ratio is at 65 to 70%, which is pretty common for a REIT. Here we see that FFO, core FFO and AFFO are all up on the 3-month period year over year, but also on the 6-month period year over year, so this looks good to me. And now that we know more about the stocks, it's time to check the historical results to see what happened there. I decided to include the S&P 500 as a benchmark, since this is one of the easiest ways to invest. Just buy an S&P 500 ETF and wait. Next to that, I decided to include FRT and Realty Income, ticker symbol O. On the 5-year chart we see that Triple N stock returned 19% including dividends, which isn't a lot to be honest. Especially if we check the S&P 500 which returned 58% including dividends. FRT did even worse with minus 13% and Realty Income had a return of 33%. So on the 5-year chart none of these stocks did beat the S&P 500. And remember, this is including dividends. On the 1-year chart we see that Triple N stock performed slightly better than the S&P 500. A minus 9% versus minus 15% return. FRT returned a minus 22% and Realty Income returned minus 10%. On the 6-month chart, Triple N stock and the S&P 500 performed quite similar, a minus 12% versus minus 14%. FRT returned minus 23% and Realty Income returned minus 18%. On the 1-month chart we see some interesting things happening. Triple N stock returned minus 9% versus the S&P 500 at minus 3%. FRT and Realty Income performed similar to Triple N stock. Overall I think the S&P 500 was the better investment here. But maybe this could also mean that Triple N stock could be interesting right now. So let's check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you'll receive similar analysis to this one every week. Let's continue by diving into the fundamentals. NNN Stock is a 6.8 billion market cap company with a PE ratio of 21. But to be honest, I don't like using a PE ratio with REITs, so that's why I'm focusing on the price to FFO. As of today, NNN Stock has a 13.3 price to FFO, which could indicate that they are undervalued. Trailing 12-month revenue is at 748 million, and in this graph we see that revenue went up really nice and steady. There was a small decline, but this is related to the lockdown periods, which doesn't concern me at all. Revenue went up again right after things cooled down. Net income is at 360 million, which gives us a profit margin of 42%, which is slightly above the 5-year average of 41.7%, so this looks all good. Margins seem to be very steady. In this graph we see the earnings per share. It's going up in the long run, which is good of course. It's not that it's nice and steady, but okay, it's a REIT, so it's a bit different. In this graph we see the FFO per share per year for NNN. Unfortunately, the years 2012 to 2016 are invisible, since I don't have an account for this website. We see that since 2017 FFO is increasing, but in 2020 it went down, which is the lockdown period related. And this is the same story for 2021. We also see that in the 4 latest quarters FFO is increasing, so this looks all good to me. Analysts expect a low to mid single digit growth in EPS in the coming years and a mid single digit revenue growth for the coming years. So that's quite interesting to see. Personally, I do think they will be able to grow at least at mid single digits here. Return on assets is at 6.3%, which is pretty decent for a REIT. Return on equity is at 7.9%, which is also fine by me. And the most important number here, return on invested capital, is at 7.2%, which is pretty good. Especially since it's above the 5-year average, so I really like that as well. Right now, total debt is at 3.8 billion. Operating cash flow is at 562 million, and leverage free cash flow is at 455 million. Total cash is at 3.3 million. So they are not capable of paying down at least 33% of the total debt. But to be honest, I'm okay with that since they are a REIT, and next to that, free cash flow is growing really nice and steady, which comforts me a lot. And to me, it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, do acquisitions and a lot of things. And it's very important with REITs because they issue a lot of new shares to raise capital. With a normal company, I don't like it when shares outstanding are increasing, but with a REIT it's different. So with the increasing free cash flow, they don't have to issue that much new shares to raise capital. In the past 5 years, only 17%, which is pretty decent for a REIT. Next up are the dividends, the thing that people love the most about this stock. Dividend yield is at 5.5%, which is of course pretty attractive. Annual payout is at $2.2, and the payout ratio displayed here isn't correct, since REITs use FFO to pay the dividends. Earlier in this video we saw that payout ratio is around 70%, which is pretty common for a REIT. So this looks all good to me. The 5-year growth rate is at only 3%, but with the dividend yield sitting at 5.5%, this doesn't bother me that much. Dividend growth is at 31 years, which is pretty impressive. Overall, this looks like a great dividend stock to me. Next up are the fundamentals of NNN stock versus some competitors. Again, I decided to include FRT and Realty Income. We see that Realty Income is by far the biggest company in terms of market cap. Revenue growth year over year is the highest at Realty Income, and so is the 5-year revenue compound annual growth rate. Net income compound annual growth rate is also the highest at Realty Income. NNN stock has the highest gross profit margin and also by far the highest net income margin and free cash flow margin. Return on total capital is also the highest at NNN stock. Dividend yield is the highest at NNN stock, and the dividend compound annual growth rate is pretty similar. FRT has the most consecutive years of dividend increases, but overall I don't think there's a real winner here. In general, I think NNN stock did pretty well, but does this mean that this stock is a buy? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. starting off with revenue growth. Earlier in this video we saw that analysts expect a mid-single digit revenue growth, and that's also the number I'm going to stick with. So I fill in 4, 5 and 6%. Profit margin is pretty steady over a longer period of time, so I'm filling in 41, 42 and 43%. It's the same story with free cash flow margin, so I'm filling in 70, 72.5 and 75. PE ratio is a bit tricky to use with REITs, so I'm filling in 15. And it's the same story with the price to free cash flow. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF in the long run. Right now, NNN Stock is at $39. I hit analyze, and we see a lot of green numbers. Please don't focus on the multiple of earnings value, since this is a REIT and PE ratio isn't the best way to value a REIT. So I'm focusing on the discounted cash flow value. We have a low price target of 40, which is around the current stock price, a mid price target of 45 and a high price target of $50. So if you believe these numbers, then NNN Stock could be a buy. My final conclusion on this stock is that I really like the business, but the fundamentals are also pretty steady, and I think that's the exact word for this company, steady. Revenue is increasing very nice year over year, but you won't see high double-digit growth here. Dividend is also very nice at 5.5%. Based on the valuation, I think NNN Stock is a buy right now. But on the other hand, the market is very volatile, so I'm not surprised if the price drops even more and we see a new 52-week low very soon. So I keep a close eye on this stock, and whenever I'm feeling confident, I'm buying this stock. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor, and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching, and I will see you in my next video.